How's it going, guys? This is Forensic Forks with Deontay, and I'm back with another video. This is episode 29 to the Asian Session Library. Here on Tuesday, the 23rd, January 2024, we had another great example with the pair US dollar versus Japanese yen. Let's walk through it together. As always, we're utilizing the New York Lunch buy side liquidity and sell side liquidity to help us trade the Asian Open. Let's find our liquidity pools. So we have one all the way up here. So that's swing high. It's going to be buy side liquidity. Get this out the way. We have other ones as well. So we mark off all the unbroken swing highs on the 15-minute time frame. I believe we got one more here. Nice. Now, if you're looking at this and you're asking yourself, well, there's no swing lows here that are unbroken, where are we going to get our sell side liquidity from, Deontay? But what I do is I take the lowest low in that session on the 15-minute time frame right here, and I make that my sell side liquidity on the 15-minute time frame. After this candle finishes closing here on the 15-minute time frame, that's going to be my sell side. Now we're going to mark off the opening price here. This is how we're going to know if the market's overbought or oversold with just price action in itself. No indicators needed. So that's 8 p.m. open here. At this point, we're going to wait to see what side is broken, whether that's buy side or sell side. We're not jumping in and trying to chase where the candles are going. We want to be counterparty to the breakout traders. So next candle, the candle goes down. So most likely traders are looking to go short. That's what we're going to assume, of course. I'm going to jump down to the 1 minute time frame. And we're going to look for our entry technique. And you can see it's right here. So let's bring it back. Happens really early in this session here. So you can see that low is rated. Price comes out, takes that low out. We're below the Asian session open. That's discount. And we can see the fair value gap here that breaks the swing high is right there. So that's our entry technique. However, this one was a little interesting. And the reason I say that is because partially some of that fair value gap is in a premium. So in this case, what I did was I just took an entry just below the open because the fair value gap is mainly in a discount. So we want to make sure the entry is below the opening price. So our entry technique would be just going long below the open, which is still inside this fair value gap. So the open was 148.116. So then we're going to go 1 pip below that. And then we're going to be looking for a 15 pip TP and a 15 pip SL. So that's what it would look like. And we can also see that 15 pip TP is also within the range of a buy side liquidity pool. I like to see that. So it gives me even more confidence that I'm most likely going to hit my projection. So we play it forward. We're in long now. And now we would hold. Let's play it through. You can see price does pull us down into drawdown, but we don't worry about that. Psychologically, we are fine because what do I teach all the traders? I teach you guys that risk management needs to be proper. If you're risking too much and price comes down and pulls you underwater and you start to get nervous and you start to get, clammy palms, or you start to tap your foot or grit your teeth, the only thing I would probably think is you probably risk way too much. Those that risk properly would not mind being in drawdown because they know it's either just a 0.5% loss or a full percent loss, and they're comfortable with that. Those that are not comfortable with their risk normally are going to be antsy when price pulls them into drawdown. Play it forward. As you can see, price comes up, gets to that 15-minute swing high. So at this point, you definitely banked in, let's say right around here. Definitely banked in more than 10 pips. So I would tell people to take partials there, right? Very minimum goal, 10 pips. The Asian session is already successful. If you're able to get 10 pips from your entry, you're able to move the stop loss to break even, or you can keep the stop loss to where you want it, so that if price were to continue to trade back down, you can adhere any cycles or pullbacks, and price could potentially continue to go higher. I believe in this example, we only were able to get max maybe 13 pips before getting stopped out. And we can see we got stopped out. But all in all, you can see from the idea, we had the right area of buying. Buying below the Asian session open is very crucial to finding the best price possible for a buy scenario. That's how we were able to find this buy scenario and price rallies up. We do see other fair value gaps, of course. I know people will mention that. What about this BPR, this balanced price range? What about that fair value gap? I'm not looking for that fair value gap. The entry technique remains the same in each one of these episodes. Even though that this entry was higher than this one, I'm still going to opt for this one because I believe that this is the one that's normally going to hold the structure to the upside. Even though we can see it falter and buckle and fall through, it's okay because we know that we took a certain risk parameter that we're comfortable with taking. So, all in all, hopefully this was insightful. This is episode 29. Peace.